YouTube community, what's up? What's up? Wanted to talk about where we are in the market and why I think this is a really opportune time to jump in and go long. Okay. Excuse me if there's some noise in the background, but it is what it is. Okay, so I'm looking at, just before we even get into the upper chart, I have this lower chart indicator down here, and this is a 3-period breakout indicator. Write me if you want to get this. It's really helped me with staying on the right side of the market. Okay, sometimes you think the market is going up and it's going down, and vice versa, but this is basically what it's doing is counting the last periods and the last 3 periods and seeing if this period, for example, is lower than the previous 3, then it prints up a lower low, and it's doing that until otherwise. So right now you can see this last month, November, the month of November, is a 3-period breakout month. That means that it closed higher than the previous 3 months. Okay, why is that significant? Well, let me just take you back here and just kind of show you one of the things that I always that's always been remarkable about the market for me was just seeing this pattern of cycles, so like, for example, April 2020 to October or December 2021, we had a series of just higher highs, consecutive breakout months, right? And then we had a consecutive period of breakout lows. And you can see these things don't just, happen in in happenstance, meaning like you don't have one up, one down, one up, one down. They happen in cycles. Usually if there's a breakdown, there's 2 or 3, 2 or 3, 2, then a series, 1, then a series. And a lot of these might even be false breakouts. We'd have to look at the chart and see. But my point I want to that I'd like to take away from here, these here are actually false breakouts, meaning they did not close past this candle. Okay. So the point is that these things are happening in cycles, and typically, if you're at the beginning of a cycle, that's a great thing because you're really getting in on a new cycle. All right. So right now, that the market is coming off of a high of 4808, and we really dropped significantly since then. This is the most recent low, and so that's a 28% or 30% market drop right there. Okay, that we've done in 250 days, almost over a course of a year, right? And now we're seeing a breakout high. This is a big deal. This is a big deal. And the expectation is, when you see a breakout high, there's going to be another one, then another one, then another one, then another one. And, I'm doing this on as many time frames as I can, and I hope this will kind of, for you guys that are into technical analysis, it'll kind of give you some confirmation, no pun intended, and it'll give you some context, right? Because the guy that studied with me, taught me, was like, hey, the most traders don't know. What they don't know, or what they don't think about, is movement, right? And so with movement, market movement, what do we mean? That means like, yes, you can throw on an indicator or whatever, but what is the market doing? What is the movement that's what we're in, what's the movement that we did, what's the movement we're about to do, or the anticipated movement. Excuse me. So the anticipated movement right now is that the market just made a breakout high. And most likely, we're anticipating another breakout high, another new high, right? Okay. That's the anticipation. Now, what has it done since putting in this new high? We're going to remove all these drawings. Okay. And this is our previous month, November. And what we're going to do is we're going to take our fib tool. We're going to grab this monthly low. And we're going to bring that all the way up to the previous month high right here. Okay. And so what that does, it tells us that we started off the month at 3704 and closed at 4099. Okay. So that's a decent size range. The range on that candle is 389 ticks. It's a great range. All right, so we're going to take this time thing here. It's called a time measure, and we're just going to do that. Okay, just to remind ourselves that this was the end of the month, right? Now what I want to do is take you down to the 4 hour, and hopefully I can give you a better idea of what do I mean by movement. All right, so you know that the market has broken out and making new highs. You know that the anticipation is new high. We're playing for a new high, okay? But what has it done since the end of November, right? We started off here, we put in the highs and pulled back a couple times. There's one pullback, two pullbacks, three pullbacks. And then right here on the 30th, November 30th, we put in this most recent high right here, 4099. And what has the market done since then? Let's zero in. Okay, let's zero in. What has the market done since then? You tell me. What has it done? Okay, it sold off, right? It sold off. Okay, it came off of this high and sold off to almost 50%. See, that's the 50% level here, right? So it came all the way down to 50%. All right, somewhere around here. We had a couple sell-offs though. But ever since we put in this high, market has pulled back to the 50% or 38% level. It's pulled back to, moving averages are relative because you can always go to a different time frame and you'll get a different moving average. Right here we're on the 4 hour. But if we go to a different time frame, this is all different. So that's why I like to really get specific and say, okay, well, it moved to basically the 50% level after the pullback, right? And now what is it doing? What is it doing? Like within these last few periods, you see it, the buying is starting to happen again. Okay. Now, let's look at the volume on the candles. Okay. Once it pulled back to that 50%, look at that. Boom. Big volume buying activity. We're going to highlight that. And somewhere in here, that's where then we had another big bar come in at 9, the New York session, 9 to 1, and follow through. Okay. So, our range that we're in right now, the 4 hour range, we're in a monthly range, but we're also in a 4 hour range. This is the 4 hour range we're in right here. Okay, that's from 3936 to 3967, right? Tried to push outside, but boom, it just came right back in, gravitated back into the range. All right. What's the anticipation? What's the anticipation here? Anticipation is, remember, the market moves in cycles. So the anticipation is that these cycles, we're in a cycle of higher highs that started after we hit that 50% level. And we saw some high volume buying. And the anticipation is that we'll continue to see high volume buying. All right. That's the anticipation. So when you talk about putting on getting into a trade, right now, you should be thinking long. I'm in a long cycle. After we hit this high, let me show you something really interesting. Okay, so after we hit this high, you see where the high volume selling came in? Let me show you. High volume selling. Take this highlighter and I'm going to just highlight the ranges that were high volume. This one. See the high volume selling there? Okay. Then the range got tested a few times. Another high volume. This wasn't really high volume, but it was really just a sell-off from this range. Then the range still got tested. Another high volume range right here. See this? 9 a.m. to 1. That was a New York session. Defined that range, right? Okay. Then you had, after that, a little test. See the pullback? Tiny pullbacks. And then, boom, another one came in right in here. Okay, right there. What happened? What time? 9:01. All right, that defined like that range. Okay, 40. That's a pretty good size, 62-point range. And then the final range, okay, was kind of coming around in here. Like right, this was the final, this guy right here. This was the final lower low right there. High volume, lower low, right? Now let's do this. Let's call this high volume zone. Okay, we're going to put our high point resistance there. We're going to put support there. Okay, now notice like in all of these, in this whole series, that none of these candles, yes, they got tested, but they were never breached, right? So market made a new range, tested, never breached, new range, tested a little bit, went on to form another range. This one here, this one got breached a little bit because it was really not the high volume. But this high volume range got tested here, put in another one. Now this one here, okay, the one we just drew these lines, notice what happens here. See how that guy closed above these two, this level particularly, the resistance level. Now that's telling you something. That's telling you that that's when the bulls are back in control. That's where you're really interested in going long, because that's the signal for that's telling you that at this level the bears have lost a little bit of strength there. Okay, and so when I saw that, that's when you start thinking about going long. So I went long at 3934. Like right in here, maybe a little bit higher than that. And right now you can see where my stop is. Stop loss is right below this range that I'm targeting. Okay, I'm targeting this range right now, the one that broke out above resistance, this one. I'm still below that, right? Or I could move here, but you know, my anticipation is we are in a cycle of higher highs, and I'm anticipating this happening. Okay. I'm anticipating a higher high above and outside of this range. And when that happens, I'll just continue to move, you know, the stop loss as these new ranges are forming. Where am I anticipating this is going to go? Maybe back to the monthly high and beyond. That's what I'm thinking. Because remember, let's go back out. Okay, remember this is our monthly chart, and what kind of range are we in? We're in a 3-period breakout range, and this is the new breakout, and I'm anticipating new higher breakouts. Okay. So another thing that you know, this is the 4-hour, right? So another thing to look at is, let's see if we can bring over, let me show you this here. Okay, so let's look at the 4-hour with a Fibonacci level. Okay, so you can really see something interesting. So after that range was formed, okay, let's look at this. This is the 5-hour, 5 a.m. to 9 a.m. range that broke above resistance. And then what happened after that? Okay, so let's pull over our 5-minute chart. Excuse the noise. I have kids, and anyone that has kids understand. Okay, so after we put in that 5 a.m. to 9 a.m. range, what did the market do? It pulled back almost 100%. Put in the highs, you know, tried to push higher, but eventually wound up back inside the range, right? Now, from a what's the name they use? The scalping standpoint, this could be a very powerful thing, because, you know, look at some of these moves the market made just around 9. Okay, so the market opens up at 9. You start seeing a lot of volume come in, right? And let's say you're just watching the market, and, you know, you get in on this one, right? This pullback to the moving averages. Remember, you're on the 5-minute here. This is the 4-hour over here. So you're getting in here. You got a little signal there. That's an entry signal right there, right? Right there, the CCI is oversold, negative 186. And let's say you just pop down on the next exit signal. Okay, exit signal was right there, and that's a 12-point move. It's a 13-point move. Multiply that by 50 for one contract on ES, and that's almost $600 here inside of 2 hours, right? The second nicest swing, was that correct? The second best swing, we'll say, was these were really nice, because you're really back into the moving averages. You're almost 61% into the range. See that? We're at the 618 level here. Okay, now let's say you enter long here. Okay, that's a 16 tick risk. And let's say you get out right here, and that is a 16 tick reward in 1 hour. Okay, so risking 16 to make 16 in 1 hour. That's like risking 600 to make 600. Right here, you're risking. All right, let's say you get here. You're only risking 6 ticks here. And if you got out at the exit signal, like up in here, that's 25. So that's risking 6 ticks right there. 6 and hitting a 35 here. So that's like a 5 to 1 risk to reward here, and you got a 1 to 1 to reward there. And so this is happening on a 5-minute basis, right? And so when you hear about these guys that are doing these, they're walking away with $1,600 a day, $1,500, whatever. This is the kind of thing they're doing. And the guy that taught me, when I first saw him do this, it blew me away. I was like, I couldn't believe it. I couldn't believe it that it was possible. But it is possible, but with the context of you really have to take the time to understand the where the trade is, where the market is in the big picture. So I'm going to conclude this by saying, okay, like right now we zoomed in on this 4-hour time frame, and we're looking at a very beginning of a potential super move. Just giving another example. I mean, if you got in here and your max risk is say 25 ticks or so in here, there's the 40 ticks of risk in here. But let's say you just, you got in it right now and you had 30 ticks of risk, okay? If this goes up to if this gets up to the previous month high, that's 130 ticks. So that's risking 30 to make 130. So that's a 5 to 1 potential, right? That's the kind of thing that makes people say, what the heck is going on here? But if you see, I have my first position on here. I got in back in here somewhere, but I have my first position on here. And as these ranges are forming, I'm moving the stop up, 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 up. And that's my long-term position stop. That's my long-term position. Now, when the market is really super volatile, like in the 9 to 1, and you see these, undulant waves that are happening, you can scalp. You can take a second one, go long here, pop out here, go long here, pop out here, go long here, pop out here. So you're doing two things. You're playing for the longer term, but you're also getting these little moves in as well. And when the market was moving down, okay, you're shorting, but in the same fashion. You have a long term, but you also have a short term that you might be in for minutes or an hour or two, and you're in and out. Because you don't want to miss the, for example, if you got in here, right, and you're only risking 40 ticks to get in, and as these moves are happening, you're moving your stop down. Okay, so again, that's risking 40 and you made 130. So that's like a 5 to 1. And then on top of that, you're doing the scalping trades. Okay. That's just an example of, and as I said, but in order to do that, you got to, and I'm going to conclude by just zooming in here. This is what we just looked at, but you got to be able to appreciate where you are in the bigger, movement. So far, this is a month that has made a higher high. We pulled back from the high to the 50% level, and our anticipation is that the market's gonna, move back up to the high and beyond it, Now that journey is gonna take, there's gonna be some pullbacks. There's gonna be a lot of opportunities to get in there. It might kick us out 1 or 2 times, but that journey to get back to the high is where we can add position, we can scale in, and scalp along the way as well. Okay, so just keep that in mind. Take your time, learn the technical analysis. If you want more of this, we put this on transcripts. We have seminars, free seminars. So there's a link below, and hit the link, and we will talk next time. Thank you.